vibration that lets success soar high. I will achieve, I will fly high. In SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Last week, the Prime Minister launched 75 digital banking units across 75 districts. The launch comes after the announcement made by the Finance Minister in her budget speech this year. The digital units are expected to familiarize people towards digital modes and deepen financial inclusion. Good morning, my name is Ishan Gera and you're watching the Business Standard Banking Show. In today's episode, we'll discuss HDFC Bank's results. We have an interview lined up with Monetary Policy Committee member Jayanth Varma. In our Banking for You section, experts explain what central bank digital currencies are, and our panelists Tamal Bandyopadhyay and Naveen Surya, Chairman Emeritus of Payments Council of India, discuss the nitty-gritty of tokenization. At the end of the episode, we shall discuss the last poll's result and ask you the question for the next one. So stay tuned. The second quarter for private lender HDFC was as good as the first one. Net profit rose 20%, whereas net interest income grew by 19% annually. While the net interest margin remained flat, asset quality improved. Gross non-performing assets declined to 1.23% compared to 1.28% in the previous quarter. As has been the trend, credit growth outstripped deposit growth. Meanwhile, the CFO announced that the bank might complete the merger with its NBFC arm, HDFC, a few months before schedule. Talking about preempting steps, RBI's Monetary Policy Committee has its task cut out in the next few months. Inflation has been raging in India and the developed world, and there are signals that the UK, EU, and the US will go for more aggressive rate hikes. However, MPC members seem divided on how to counter inflation. Minutes released last week showed that Ashima Goyal was the only member in favor of a 35 basis point rate hike instead of a 50 basis point. On the other hand, Jayanth Varma differed on the stance of withdrawing accommodation. Fed rate hikes and inflation shall decide the future course of rate hikes. RBI on Monday indicated that inflation had peaked. The decision to take Unified Payments Interface (UPI) global has been unanimous. Last week, NPCI announced that it had partnered with Worldline to take UPI and RuPay payments to Europe. Indian travelers will now be able to use UPI in Europe, and credit and debit card integration for RuPay shall follow later. UPI transactions clocked the 11 trillion rupee mark in September. In July, NPCI announced that it was in talks with 30 countries for UPI and RuPay adoption. LIC seems to be cementing its position in the market as well. As of September 2022, the share of India's largest insurance concern rose by 5 percentage points. The public sector insurer cornered 68.24% of the new business premium for the period ending September 2022, compared to 63.24% in March. LIC now has assets worth 41 trillion rupees. Single premium income was up 56.91%. Shares of the company have been trading at a 55% discount. LIC has a long way to go to reach its issue price. The road for the Indian economy is not certain either. Forecasters yet again revised the growth outlook downwards. Meanwhile, the central bank has raised rates by 190 basis points. But some are calling for a halt. Business Standard's Manojit Saha spoke with MPC member Jayanth Varma to understand his views on rate increases and the inflation outlook.
Hello and welcome to the Business Standard Banking Show. The Reserve Bank of India has increased the policy repo rate by 50 basis points to 5.9% on September 30 during the review of the monetary policy. On the stance, the MPC decided to remain focused on withdrawal of accommodation. Jayanth Varma, an external member of MPC, voted against this part of resolution. Dr. Varma is with us today to explain his view on the stance and monetary policy making. Dr. Varma, welcome to the show. Now, with the September inflation data, it is now clear that the average inflation, CPI inflation, remained above 6% for 3 consecutive quarters, which constitutes the failure of the monetary policy committee to meet the inflation target. What, according to you, is the main reason for this failure?
You see, I think there are 3 things that one should look at. One is that the pandemic created enormous problems, both for growth and for inflation. It created disruptions. It created, supply disruptions, which led to very large price increases. The second thing is, of course, what is going on in Ukraine, right? So these are two things which have caused inflation to go to unacceptably high levels. The third thing is, which I argued at that time about a year ago. About a year ago, I was arguing that we should have started raising rates in mid and late 2021. We held off from that for more than 6 months, and which has delayed the response. What we started doing 4 months back, we could, in retrospect at least, it's very clear we could have done that, several months before. In this case, if we had started doing this in 2021, the effect of that would be happening now. But we stayed away. There might have been good reasons for that, because it was most other members thought that the pandemic is not really over. So that was the disagreement at that time, whether the pandemic is over or not.
Now, what are the steps the MPC should take to bring inflation back to 4%? And what is the time frame you see MPC should be bringing back inflation to 4%?
Now, I think that breaks into two questions. One is that we do need to bring inflation below the 6% band very quickly. Okay, so that's where I was saying that we should probably have acted, from second half of 2021 on. Then we would not be in as big a trouble as we are today. So there, it has to be very, very quick, and which is why we kept raising rates so rapidly. Delivered 2.5% in just a few months. So that's what we have done to bring it down, and I believe that in another quarter or two, it will drop below the 6%. Then the question comes about how quickly should we bring it down to 5, and how quickly bring it down to 4. I think again we should be bringing it down to 5 also equally quickly. So in a couple of quarters we should be bringing it down to around 5, because we need a cushion. We can never be sure about our forecast. Forecasts can go wrong, and there's little comfort in saying that inflation will be below 6. Unless you bring it down to around 5, there is no margin of error at all. So bringing it down to 5 again has to happen very quickly. So in a couple of quarters, we should be in the ballpark range of 5. That is absolutely essential. But the next question is, how quickly do we bring it down to 4? See, the process of bringing inflation down is also inexorably a process of inflicting pain on the economy. There is no painless way of bringing inflation down. You bring inflation down by pushing growth down, right? In developed markets, they're even more clear about that. You bring inflation down by forcing the economy into recession. Economies like us will probably not need to push it into recession, but we will need to bring growth down significantly to bring inflation. And it is one thing to bring growth down when the economy is doing well. If the economy is growing at 8% and we say we will bring that down to 6%, that's one kind of a thing. But if the economy is growing only at 6, and then you say let's bring it down to 4, that is a lot more painful. And then the MPC has to balance these two mandates and ask how much pain do we want to inflict on the economy versus how quickly do we want to bring it down to 4%. So that's where That's where, the thing is, there are a lot of uncertainties about inflation as well. So many of us are hopeful that the worst of the supply side shocks are over from the global point of view. So maybe inflation will start easing from that side about what's happening to commodity prices and so on. Much of the worst of that has reversed. So maybe we will see inflation, and we are at fairly reasonable interest rate now, which would start pushing the inflation down. So that is the balancing call, which is why I'm arguing for wait and watch. Let's see what happens over a quarter or two. And if we see inflation gliding down, then we could continue to let it glide down gradually and effect a soft landing. The question is, do we want to have a hard landing or a soft landing? And we would prefer a soft landing. But if inflation remains well entrenched and our projected decline does not happen, then clearly we will need more of the betterments. We will need to raise rates even more and dampen demand more aggressively. We would need to do that. But the hope is that will not be required. The hope is that the tightening that we have delivered will start having its impact in another couple of quarters. 4% in 2 years' time, what we're saying is that if everything continues to be as bad as it is now, that crude oil remains elevated and volatile, and economic growth continues to be slow, both inflation and economic growth being adverse, then we would be, then we are saying, is it too bad to bring inflation down more slowly, to bring it down to 4 so that we do not shut down the only remaining engine of economic growth. That's really the thing. But the hope is that we come down to 4 faster because economy grows faster and we can tighten faster, and that commodity prices come down faster and do the job for us.
RBI has to write a letter to the government explaining why it has failed. Do you think the content of the letter should be made public?
I would, as an MPC member, I wouldn't want to comment on that. As a private citizen, I have a strong view, but as an MPC member, I would not like to.
Dr. Varma, it was a pleasure talking to you. Thank you so much for speaking to Business Standard.
Thank you.
Varma called for a pause on interest rate increases. He did not express views on RBI's letter to the government explaining its failure to keep the inflation within target. But he did say that he had strong view on the matter as a private citizen. Another issue that is drawing strong views from people is the e-rupee. RBI announced that it would soon announce a pilot of central bank digital currency or CBDC. Only 10 countries have their own CBDC. Our experts explain what a central bank digital currency is.
Central Bank Digital Currency or CBDC is a digital form of currency notes issued by a central bank. The Reserve Bank of India defines CBDC as the legal tender issued by a central bank in a digital form. It is the same as a sovereign currency and is exchangeable one-to-one at par with the fiat currency. While money in digital form is predominant in India, for example in bank accounts recorded as book entries on commercial bank ledgers, a CBDC would differ from existing digital money available to the public because a CBDC would be a liability of the Reserve Bank and not of a commercial bank. CBDC is a sovereign currency issued by central banks in alignment with their monetary policy. It appears as a liability on the central bank's balance sheet. CBDC must be accepted as a medium of payment, legal tender, and a safe store of value by all citizens, enterprises, and government agencies. It would be freely convertible against commercial bank money and cash. It would be fungible legal tender for which holders need not have a bank account. CBDCs are being issued by central banks faced with dwindling usage of paper currency as they seek to popularize a more acceptable electronic form of currency like in Sweden. They are also being issued in jurisdictions with significant physical cash usage, seeking to make issuance more efficient, like in Denmark, Germany, Japan, or even the US. They have some clear advantages over other digital payment systems. Their being a sovereign currency ensures settlement finality and thus reduces settlement risk in the financial system. Issuance of CBDCs would lead to a reduction in cost associated with physical cash management, as the cost of cash management is significant. Adopting CBDCs would also further the cause of digitization and lead to a less cash economy. The RBI is planning to launch its own digital currency, namely the digital rupee or the e-rupee. The e-rupee would offer the public access to digital money free from credit and liquidity risks. The RBI would soon commence limited pilot launches of the e-rupee for specific use cases. CBDC could be account-based CBDC in the wholesale segment and token-based CBDC in the retail segment. Two models are being examined for the issuance and management of CBDCs: the direct model and the indirect model. In the direct model, the central bank is responsible for managing all aspects of the CBDC system like issuance, account keeping, and transaction verification. In the indirect model, the central bank issues CBDC to consumers indirectly through intermediaries. Consumers' claims are managed by the intermediary, as the central bank only handles wholesale payments to intermediaries.
I am the blue of the limitless sky. I am the inspiration that lets success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Besides digital currencies, tokenization is also drawing a lot of attention. After 3 extensions in 9 months, the central bank did not budge and decided to implement the tokenization norms. Merchants will need to purge card data and use tokens from now onwards. But despite tokenization being enforced, knowledge about it is limited. Our consulting editor Tamal Bandyopadhyay and Naveen Surya, Chairman Emeritus of Payments Council of India, discussed the issue of entailing tokenization. Hi Tamal, hi Naveen, thanks for coming on the show.
Thank you.
Tamal, let's start with you because your column this week explained tokenization very well. Can you explain for our audience what is tokenization in simple terms?
And this tokenization is, I would say, it's sort of want to make it a leak-proof transaction. Now, how does it happen? Who are the parties involved? So primarily, Ishan, you are the cardholder. Your bank, which issues the card, whatever bank it is, and the payment gateways like, say, Visa, Master, RuPay, Diners, Amex. These are the primary. And there are 2 more entities, which are the payments aggregators and the marketplace, the shop where you are buying. Now, the problem is probably lies with that because they are a bit porous. Now, the data could be leaked from these sources. And this tokenization, what does it mean? We want to make it leak-proof in the sense, well, banks need to have your details, you need to have your details, and the Visa Masters, they should have your details, but not necessarily the merchants and the aggregators, payment aggregators. So tokenization means next time Ishan is getting into it, Ishan is getting an option, whether you want to continue to key in all your information again and again, because anyway, under the RBI norm, now they cannot store, or you replace it with token. So that's it.
Naveen, Tamal made a very complicated concept very simple, but it still stands complicated. My question is, should the RBI have given more time to players for tokenization? We saw what happened with auto debit rules last year.
So I think you can't do better than Tamal in this. I mean, he always makes things so simple. But on the time part, Isan, I think any time that you give will always be less. Let's not forget that this has been in talks for over 3 years now already. And this was part of the RBI vision document also. And the delays and the complexities and a confusion you see because probably resistance to new change, right, across the stakeholders. Mm-hmm. And probably this is an innovation. While the fintechs and the payment companies are known to do innovations, but RBI is also known to do innovations, especially on a security side. So it was started with OTP. This is now tokenization. This is next level and next level need for this industry.
Tamal, let me take the part from transaction failures of what Naveen talked about. Now, you highlight in your column that 350 million tokens have been issued, 40% of all online transactions were tokenized. That's a long way off from covering everyone. Can we expect transaction failures to rise? One. Two, has the RBI been a bit fast in this move or not?
No, absolutely not. I think enough rope is given for you and me. There is no cost and we have the choice. So it's safe, definitely. And it's again, Ishan, up to you whether you want to use it or you want to continue with the old system. But the merchants no longer can keep your data. That's for sure. And enough time is there.
Now, Tamal talks about the cost for customers not to be there. What about the cost for banks, Naveen? How much of an overhead cost do banks can expect because of tokenization?
So I would not just restrict it to banks. I think there are multiple stakeholders, right? There are networks who are actually designing the solutions and providing. So for them, it anyway is a revenue. Banks who are the issuing side, banks who are on the acquiring side, and the aggregators and the merchants. Yeah, there will be some sort of a cost element, but if you really implement it in a right way, the idea of a benefits, which comes in a way of chargebacks, frauds, other issues, and the overall experience, it will overweigh. And RBI has always been extremely cautious. They always monitor everything. And you've seen already that in some cases, actually, we see that there is actually no cost. It's zero. So I don't think cost has been one of the bigger issues. In a temporary time, I think the indirect cost of implementing in terms of education, system changes, processes. Yes, there is one-time cost. That probably is the concern. Eventually, I think in a year to 2 years' time, on the whole, it won't be very high. At some stage, I think we'll all have to figure out that how does this whole OTP businesses go away? Because that also is very costly by doing tokenization as this gets stabilized. And then probably the benefit may outweigh the costs. So that probably could be the next stage once this gets settled and let's say implemented at least at a 60-70% level.
Now, Naveen, one more point that springs to mind is the usage of card apps, which is very limited till now. Is that going to change with tokenization, and will that make the process more cumbersome for the user? Because, and is there going to be another common token requester app which will allow for changes to limits and allows the user to withdraw consent?
So I think we have not seen that evolution yet, and I think those are waiting to happen. I mean, the way you see Apple Pay in US, right? Or you see Samsung Pay in rest of the Asian countries.
Yes.
In India, is still yet to catch up. And you're right, the tokenization will help in a big way. But again, please understand that those two have one big limitation, which is beyond this tokenization rule, which is the access to the OS. So those are different issues which are even beyond RBI currently and at the government level and probably Ministry of IT discussion that needs to take place. That if similar situations has to come, some of these handset manufacturers to also allow them or a third parties or even competing parties for that access. And a similar issue exists with even other hardware manufacturers. I mean, we know all the names. So those are different challenges, but obviously you will see a lot more innovation with this.
How would RBI ensure compliance? Do you think there's a need for a separate regulator to check compliance with digital rules across networks? Because now the system is really growing.
Well, I mean, there are certain corners we are hearing this, but I think Reserve Bank of India has been gearing itself, it has changed itself. So Reserve Bank of India is changing itself. Whether it is exactly qualified to oversee the digitization or we need to wait and watch. But for the time being, I would not think that we need a separate regulator.
Naveen, the new thinking, old regulator part would work, or do you need a new thinking, new regulator?
I think for RBI, that's not true. At the national level, you need some cohesive security or a digital policy because, like I said, some issues are even beyond RBI. For an example, if you have to implement a financial security for all the stakeholders, it cannot be done by regulating the, let's say, tech and fintechs and license holders within the financial system. It also goes well into the hardware that you use. So unless you have the similar rule enforced end to end, you cannot achieve security. Now, again, those are the areas where probably a cohesiveness is required so that we understand these issues end to end. For issues like tokenization, I don't even think that this is very clear.
That's about it. Thank you. Thank you both for coming on the show. We hope to see you again. Thank you. Tokenization entails a unique token being issued for each website. So in case of a hacking attempt, a customer's card details would remain out of reach. While customers will have to bear no cost, there would be a cost for banks. Last week, we asked you a question as regards the management of the rupee. The currency had crossed 82 against the dollar, and we wanted to know whether RBI should step in and be aggressive about currency management. 77% of the people felt the central bank needed to be more aggressive. The response seems natural given the rupee's decline compared to other currencies. This week, we want to know your opinion on digital banking and digital payments. Of the 23 banks which have launched digital banking units, 11 belong to the public sector. Meanwhile, despite having a larger share of customers, public sector banks' share in UPI apps is dismal. So we want to know if public sector banks have done enough to promote digital banking and digital payments. Unless PSPs promote digital and become part of digital literacy campaigns, India cannot achieve the dream of digital banking. That's all for this week. Our polls open on Friday and you can respond on Twitter, Instagram, Telegram, LinkedIn and our website. See you again next week. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.